Have you ever entered a trade because everyone else was talking about it? And minutes later, you felt that sinking feeling in your chest. Like you weren't investing, you were chasing. Today we're talking about why market hype might be the most expensive mistake you don't realize you're making. Let me tell you a quick story. There was a trader, maybe you, maybe someone you know, who woke up one morning and saw the charts exploding. Social media was screaming, "This is the next big move." Green candles everywhere. Influencers confident. Comment sections filled with rocket emojis. It felt like opportunity. It felt urgent. It felt like if you didn't enter now, you'd regret it forever. So he clicked buy. Not because the setup was clean, not because the risk made sense, but because the noise was loud. And when the hype cooled down, so did his account. Here's the truth no one likes to admit. The market doesn't reward excitement. It rewards discipline. Hype is emotional. Trading is logical. And when those two collide, your psychology pays the price. Market hype is like a crowded casino table where everyone is cheering after one big win. You walk over thinking there must be something special happening there. But what you don't see are the quiet losses that happened before and the ones that are about to happen next. The noise hides the risk. The dangerous part? Hype feels smart in the moment. It feels validated. When thousands of people agree, it feels safe. But in trading, safety doesn't come from agreement. It comes from structure, from patience, from a system you trust even when nobody is talking about it. Most beginners don't lose because they lack indicators. They lose because they borrow conviction from strangers. They trade someone else's excitement instead of their own plan. And that's where manipulation thrives, in urgency and fear of missing out, in the illusion of certainty. If you want to survive in the market long term, you have to learn to recognize when you're being educated and when you're being emotionally pulled. So stay until the end of this video, because after watching this, you won't just see hype the same way again. You'll start spotting the traps before they cost you. Let's start with the most powerful manipulation of them all, urgency. You've seen it before. Last chance. Don't miss this breakout. This move won't wait. And suddenly your heart beats a little faster. Your mind starts racing. You're not analyzing anymore. You're reacting. I remember talking to a trader who told me, "I knew it wasn't my setup, but I felt like if I didn't enter, I'd regret it." That sentence right there explains so many blown accounts. It wasn't logic that pushed him into the trade. It was the fear of missing out on something that looked bigger than him. Here's the dangerous truth. The market will always create another opportunity, but hype makes it feel like this is the only one. Urgency is powerful because it hijacks your survival instinct. When something feels scarce, your brain treats it like a threat. You stop thinking in probabilities. You start thinking in extremes. Either I win big or I get left behind. And when you trade in that emotional state, your edge disappears. The market doesn't move because you're late. It doesn't punish you for waiting. In fact, patience is often the very thing that separates professionals from gamblers. Think about it. If a setup is truly high quality, it doesn't need to scream. It doesn't need countdown timers. It doesn't need aggressive captions. Clean opportunities are quiet. They form. They confirm. They respect structure. Manipulators know most beginners struggle with patience, so they weaponize speed. They create the feeling that time is running out. Because when you feel rushed, you don't check risk to reward. You don't measure position size. You don't ask, "Does this align with my plan?" You just click. And clicking without clarity is expensive. Deep down, the problem isn't the market hype. It's our desire for fast progress. We want growth now. We want results now. We want to feel like we're moving forward. And urgency feeds that desire like fuel to fire. But discipline feels boring. Waiting feels uncomfortable. Watching a move happen without you feels painful. That pain is the test. The traders who grow long-term are the ones who can sit through that discomfort and say, "If it's real, it will still be there when my rules align." Avoiding urgency isn't about being slow. It's about being intentional. It's about protecting your psychology from manipulation disguised as opportunity. Because the moment you master your reaction to urgency, you stop being controlled by the crowd. Let me ask you something. Have you ever felt more confident in a trade just because thousands of other people agreed with it? Be honest. You open your phone, and suddenly everyone is posting the same chart, same direction, same bias, Same confident captions, comment sections filled with "I'm in" and "to the moon." And without realizing it, your doubt fades. Not because the setup improved, but because the crowd got louder. That's social proof pressure. I once watched a trader hesitate on a setup for hours. He didn't like the structure. Risk wasn't clean. Volume didn't confirm. But then a big page posted the same idea. Engagement exploded. And just like that, his hesitation disappeared. Nothing about the chart changed. Only the number of people agreeing did. That's how powerful social proof is. It makes you feel safe. Humans are wired that way. If many people believe something, it must be right, right? Not in the market. In trading, the crowd often becomes confident near the top and fearful near the bottom. When price has already moved significantly, that's when agreement is loudest, because now it's visible, now it's obvious, and obvious moves attract attention. But obvious doesn't always mean early. Here's the uncomfortable truth. When everyone is convinced, risk usually increases, not decreases, because most of the easy money has already been made. Social proof removes responsibility. It feels lighter to lose when everyone else is losing too. It feels easier to enter when you're not alone. But that mindset slowly destroys independence. A professional trader doesn't ask, "Who else is in this trade?" They ask, "Does this align with my edge?" Big difference. When you depend on agreement, your confidence becomes borrowed, and borrowed confidence disappears the moment the crowd turns silent. Then panic kicks in. Then doubt returns. Then emotions take over. Real confidence comes from data, from backtesting, from journaling, from knowing your numbers so deeply that you don't need validation. And that kind of confidence is quiet. The market doesn't reward popularity. It rewards preparation. So the next time you see everyone posting the same trade idea, pause, take a breath. Ask yourself one simple question. Would I take this if nobody else was talking about it? If the answer is no, then you're not trading your system. You're trading the crowd, and the crowd doesn't protect your capital. Let me paint a picture for you. You're scrolling late at night. You see someone post a massive win. Clean entry, perfect exit, big profit. The caption says, simple, or easy, or just follow the plan. And for a second, you feel small. You start questioning your own progress. You look at your recent trades, the break-evens, the small losses, the slow growth, and it suddenly feels like you're behind. That right there is the highlight reel trap. What you're seeing isn't the full journey. It's the best 1% moment packaged for attention. What you don't see are the months of drawdown, the miscalculations, the emotional mistakes, the days of hesitation, the nights of doubt. But your brain compares your entire reality to someone else's best snapshot, and that comparison creates pressure. I once coached a trader who was doing fine. Not extraordinary, not terrible, just consistent. But he kept sabotaging himself. Why? Because every time he saw someone post a 20-hour trade, he felt like his 2-hour win wasn't enough. So he started increasing risk, forcing trades, trying to catch up. And that's when his account started bleeding. The market doesn't care about your timeline. It doesn't reward you for being impatient. And it definitely doesn't punish you for growing slowly. The highlight reel illusion makes trading look glamorous. Fast money, big moves, overnight growth. But sustainable trading is usually boring. It's repetitive. It's disciplined. It's small edges compounded over time. The real professionals rarely post their losses. They rarely show the days where nothing happens. Because that doesn't get attention, but that's where the real growth happens. If you're constantly consuming only winning screenshots, your expectations become distorted. You start thinking every trade should be perfect. Every week should be green. Every setup should explode. That expectation creates emotional volatility. And emotional volatility leads to financial volatility. Here's the mindset shift. Instead of asking, why am I not making what they're making, ask, am I executing my edge correctly? Your journey is not a competition. It's a craft, and mastery takes time. When you stop chasing highlight moments and start respecting process, something powerful happens. Pressure decreases. Clarity increases. You trade what's in front of you, not what's trending online. Because in the end, it's not about how impressive your trades look. It's about how sustainable your growth becomes. Let's talk about something subtle, but powerful. Authority. You see a trader with a clean profile, professional graphics, confident tone. maybe a luxury car in the background, maybe a verified badge, maybe thousands of followers. And instantly your brain assigns credibility. You think, he must know something I don't. That's the authority illusion. I once watched a beginner completely abandon his strategy because a well-known figure online said the market was about to reverse. His plan said wait. The structure said no confirmation. But the authority said this is it. So he trusted the voice over his own rules. The market didn't care about the follower count. It moved the opposite direction. Here's the uncomfortable truth. Confidence and competence are not the same thing. Someone can speak with certainty and still be wrong. In trading, even professionals are wrong regularly. That's part of probabilities. But hype uses authority to remove your doubt. When someone sounds sure enough, you stop asking questions. You stop verifying. You stop thinking independently. Authority works because it makes uncertainty feel uncomfortable. Trading is already uncertain, so when someone steps in and says, "Don't worry, I've got this figured out," it feels relieving. But relief is not an edge. Your account doesn't grow because someone else sounds convincing. It grows because your process is tested, repeatable, and aligned with your risk management. Real mentors teach you how to think. Manipulators tell you what to think. There's a big difference. If someone can't explain their reasoning clearly, if they can't show risk, if they can't admit losses, then what you're seeing isn't authority. It's marketing. The strongest traders I've met don't pressure you. They don't shout predictions. They talk in probabilities. They respect uncertainty. They focus on execution. And most importantly, they encourage independence, because at the end of the day, when you're about to click buy or sell, it's just you and the chart. No influencer will feel your drawdown. No authority will manage your risk. No follower count will protect your capital. So the next time someone speaks with extreme certainty about where price must go, pause. Ask yourself, do I understand this setup deeply enough to risk my own money on it? If the answer is no, then it's not conviction. It's borrowed belief. And borrowed belief is fragile. Build your own understanding. Strengthen your own analysis. Let your confidence come from preparation, not persuasion. Because in this game, independence is power. Let me be real with you for a second. Most people don't get into trading because they love charts. They get into trading because they want freedom. They want speed. They want to change their life fast. And hype knows that. So it sells the dream. You see screenshots of huge profits made in one day. You hear phrases like flip your account, small capital to 6 figures, financial freedom in months. It sounds inspiring. It feels possible. And maybe part of you thinks, why not me? That's the fast money fantasy. I remember a trader who started with solid risk management, slow growth, careful entries. He was building something sustainable. But then he started consuming content that glorified massive returns. Suddenly his 3% month felt insignificant, so he doubled his lot size, then tripled it. He wasn't trading differently because the market changed. He was trading differently because his expectations changed. And expectations shape behavior. Here's what hype doesn't show you. For every explosive win, there are countless accounts that were wiped out chasing the same move. You see the survivor. You don't see the silent majority who disappeared. The market can absolutely provide life-changing returns, but not through emotional shortcuts, not through desperation, and definitely not through gambling disguised as ambition. There's nothing wrong with wanting more. There's nothing wrong with dreaming big. But when you trade from a place of, I need this win, you lose objectivity. Need creates pressure. Pressure creates mistakes. And mistakes compound fast. Slow growth feels boring. It doesn't look impressive online. Nobody celebrates disciplined position sizing. Nobody goes viral for respecting a stop loss. But that's the foundation. The traders who last are the ones who shift from, how fast can I grow this, to how long can I protect this? That mindset alone changes everything. Because wealth in trading isn't built in one explosive move. It's built in hundreds of small, controlled decisions. It's built in patience when others are greedy. It's built in restraint when others are over-leveraged. The fast money fantasy makes you focus on the outcome. Professional thinking focuses on the process. So ask yourself honestly, are you trading to impress people or to build something that lasts? Because the moment you stop chasing speed and start respecting structure, you stop being vulnerable to hype and you start becoming dangerous in the right way. Let me tell you about a different kind of manipulation. Not urgency, not authority, not even fast money. This one is storytelling. You've seen it. A post that starts with, "I was broke. Nobody believed in me. I almost quit trading." Then dramatic music, screenshots of losses, a turning point, and suddenly massive profits, success, freedom. And while you're watching, you don't just see a trade idea. You see yourself in the story. That's the emotional narrative play. Stories are powerful. They bypass logic and go straight to identity. You're not analyzing risk to reward anymore. You're connecting emotionally. You're thinking, if he made it out, maybe this trade is my turning point too. I once spoke to a trader who entered a breakout not because it matched his system, but because the person promoting it framed it as a once-in-a-cycle opportunity. It wasn't just a setup. It was positioned as destiny. And destiny feels bigger than discipline. Here's the truth. The market doesn't care about your comeback story. It doesn't reward inspiration. It rewards execution. Manipulators understand that most beginners aren't just looking for profits. They're looking for meaning. They want trading to be the chapter that changes their life. So hype wraps trades in emotion. It makes them feel symbolic, revolutionary, personal. But trading is not personal. It's statistical. When you attach emotion to a specific move, you increase the psychological weight of that trade. You hold losers longer because you believe. You size bigger because it feels right. You ignore invalidation because the story is too powerful to let go. That's dangerous. The strongest traders I know separate inspiration from execution. They can listen to a motivating story and still wait for confirmation. They can feel driven and still respect risk, because motivation should fuel discipline, not replace it. It's okay to be inspired. It's okay to want your breakthrough. But breakthroughs in trading don't come from one emotional trade. They come from consistency. The next time you see a powerful narrative attached to a market idea, pause for a moment. Strip the story away. Remove the music. Remove the emotion. What's left? Is there structure? Is there confirmation? Is there risk control? If the answer is unclear, then what you're reacting to isn't a setup. It's a story. And stories are meant to move hearts, not manage accounts. Stay inspired, but trade with logic. Because when emotion drives the entry, discipline usually pays the exit. Now we're going to talk about something most beginners don't realize until it's too late. Sometimes, the hype isn't about helping you enter. It's about helping someone else exit. Let that sink in. There are moments in the market where excitement suddenly explodes. Big promises, bold predictions, aggressive confidence. Everyone is told the same thing. This is going higher. And as new buyers rush in, price spikes. But what many don't see is this. Large players need liquidity to close positions. They can't just exit quietly. They need volume. They need participants on the other side. And hype creates participants. I remember watching a chart where price had already made a strong move up. Structure was stretched. Risk was terrible. But online, the narrative was louder than ever. Breakout confirmed. Next leg starting. Massive target incoming. Retail traders piled in. Minutes later, sharp reversal. What happened? The late buyers became exit liquidity. Here's the painful lesson. The market often transfers money from emotional participants to prepared ones, from reactive traders to strategic traders. If you're entering after massive expansion, without structure, without confirmation, without a clear invalidation point, you're not early. You're late. And being late in a hyped move is expensive. This doesn't mean every breakout is fake. It doesn't mean every trending market will reverse. But when excitement is peaking, that's exactly when you should slow down. Professionals ask, where is value? Where is risk defined? Who benefits if I enter here? Beginners ask, how much can this run? That difference in questioning changes everything. Hype makes you feel like you're joining momentum, but sometimes you're just providing liquidity for someone smarter and more patient. And this is where maturity in trading truly begins. You stop asking, how do I catch the move? And you start asking, is this move already overcrowded? You stop chasing candles. You start waiting for pullbacks. You stop reacting to noise. You start respecting structure. At the end of the day, the market isn't your enemy. Hype isn't even your enemy. Impatience is. The moment you realize that not every exciting move is an opportunity, some are traps, you level up. Because survival in trading isn't about being the fastest. It's about being the most disciplined when everyone else is emotional. And when you master that, you're no longer part of the crowd. You're thinking like the other side of the trade. If you've made it this far, I want you to really pause for a second, because this isn't just about avoiding hype. It's about protecting your future. Every manipulation we talked about, urgency, social pressure, authority, fast money fantasies, emotional storytelling, exit liquidity, they all have one thing in common. They test your discipline. And trading at its core is a discipline game. You don't need to be the smartest person in the room. You don't need to catch every breakout. You don't need to turn a small account into something massive overnight. You just need consistency. You need emotional control. You need patience when the crowd is impatient. That's it. Remember this, hype is loud, but real growth is quiet. The traders who build long-term success are usually the ones who move in silence. They let others chase. They let others react. They focus on execution. And if something in this video made you reflect, maybe on a past trade, maybe on a mistake you've made, that's not a bad thing. That's growth. We've all been there. We've all chased. We've all clicked buy when we knew we shouldn't. The difference between staying stuck and leveling up is awareness. Now you're aware. So here's what I want you to do. Drop a comment below and tell me which manipulation hit you the hardest. Was it urgency? Social proof? Fast money? I read those comments and I genuinely want to know where you are in your journey. If this helped you see the market differently, hit the like button so more traders can avoid the same traps. And if you're serious about improving, not just making money but becoming disciplined, subscribe and stay connected. Because this channel isn't about hype, it's about mindset. It's about structure. It's about building traders who last. And I'll see you in the next one.